Amagi Metals, where financial freedom is yours.
Thank you for joining us, Amagi fans and followers. I'm happy to have with us today an Associate Scholar of the Mises Institute and a Senior Fellow at the Pacific Research Institute. He has also authored the book, The Politically Incorrect Guide to Capitalism, and you can find plenty of his writings in major publications like the Washington Times, Forbes magazine, and one of my favorites, The Freeman. Dr. Robert P. Murphy, everyone, thank you so much for joining us today.
Thanks for having me.
So I wanted to get into some current events with you. Really excited to pick your brain, but I wanted to cover a little bit of history first because I think our audience is really tuned in to what has happened in the past and how it's affecting us today. So I wanted to get started by going back to the popular topic of the Great Depression that you've actually written quite a bit about. And I know it's really common for the mainstream media to point the finger at laissez-faire policies, and we're kind of dealing with the same thing today with everything that's going on with our current economy. So I just wanted to know where that blame should have actually been pointed during the era of the Great Depression.
Well, sure. This is a huge topic, and if people want more, they can Google Robert Murphy Myths of the Great Depression, and I've given talks at the Mises Institute. You can get those lectures online for free. But just very briefly, you're right that I was certainly taught, and you probably were too, or those of your listeners who went to regular mainstream schools, that, the reason the Great Depression happened was because, can you imagine, way back then, they didn't have an SEC, they didn't have FDIC, they didn't have all the wonderful federal agencies and programs that we have, after the New Deal. And so back then in the 20s, people could do whatever they wanted, and there was this massive stock market boom. People could borrow on, buy stocks on credit and so forth. And so then there was this big crash in 29, which is, of course, had to happen because capitalism is inherently volatile. And then that guy, Herbert Hoover, bless his soul, he just really didn't think the federal government had any power to do anything and just sat back in the White House and did absolutely nothing. And so the whole country just collapsed into this depression. And fortunately, FDR came in and saved the day. Right, that is the standard narrative, and FDR got us out of the Depression with his New Deal and other far-sighted policies. So every single thing about that is totally wrong. First of all, the Federal Reserve was inflating through the 20s, and so that's what fueled the stock market bubble, which then inevitably crashed. Now if that were the only thing that happened, there would have been a big bubble and a crash, and there would have been a bad recession for a year or two, but that's not what happened. Herbert Hoover, contrary to what we're taught, actually was the most interventionist president in U.S. history in peacetime up to that point. And in my book on the Great Depression or my online articles, people can see. That's objectively looking at the metrics of government spending and things like that. He massively increased the deficit. One of FDR's lieutenants later on in the late 30s admitted that, everything we did under the New Deal was just an extension of what Hoover had started in his administration. Okay, so, and just one last thing on that is, if you think about it, nobody is saying that Herbert Hoover cut back the size of government, right? It's not like government had been grown under his predecessors and he scaled it back. So it doesn't really even make sense to just say, because Herbert Hoover did nothing, that's why the U.S. had the worst depression in history on his watch, because how come it didn't happen with all the earlier presidents who also did nothing? Right, so what would make sense, though, is if Herbert Hoover ratcheted up government more than anybody else had up to that point, and then something different happened, and that's what we do find. And you can even read Herbert Hoover's memoirs where he explains that previous presidents would have done nothing, but I, on the other hand, went into counterattack and did all sorts of unprecedented things. And he was right, he did, and that's why he had an unprecedentedly bad economy.
Right. However, in a lot of readings I've read, and maybe you can debunk this, I don't know if it's true or not, but from what I've read, more millionaires per capita were created during that era than any other point in history.
I don't know that off the top of my head whether that's true or not. It could be true because the problem is there were a lot of swings in government policy that caught a lot of people off guard, and so it is conceivable that some people would have, who were politically connected, for example, who just were more astute at guessing what the Fed and the government were going to do, could end up making a lot of money. I guess that's possible, but I don't know that off the top of my head if that's true.
Right. Well, I was kind of seeing it more as, a lot of people now in the economic situation we're in see this crisis as opportunity, and a lot of people, in the liberty world and people who support laissez-faire policies find that there is opportunity right now.
Well, yeah, I mean, I think as a general rule, you don't want to be fatalist and just say, oh, well, the government's screwing me, and so I'm just going to sit here and mope and I can't do anything. No, the creative powers of the human mind, and even if you do have still the vestiges of a market economy, you can always go out and figure out, okay, how can I provide value to customers and go ahead and do that and generate income. So, yeah, that's always on the table, and in fact, it's needed most when the economy's on the ropes.
Right, right. And so many of the themes with the current economic situation and every single, president's term, everything goes towards the president. Everything says, well, it's Herbert Hoover's fault. Right now it's President Obama's fault. And that's kind of a huge flaw that comes along with centralization. So a lot of your economic mentors like Mises and Friedman were pretty apologetic towards the state when it came to blanketed laws. But I've read, your chaos theory, and I just want to hear a little bit about how, the state does not actually have to exist in that small, minute way that Mises and Friedman talk about.
Well, sure. So, yeah, this is a big subject, and again, if your listeners want to read more, if you go, I've got, for example, if you could Google Robert Murphy private law, you can see I've given lectures, or if you want to read it, you can see my essays that are free. But you're right. I think most people, especially those who are interested in libertarianism or voluntarism, they certainly understand. It's easy to see how the government could privatize the roads, right? Yeah, you can easily imagine. There'd be some logistical difficulties about how would they get payment and things like that, but it's not a huge leap to think surely private business could operate roads much better than the government does. And schools, obviously, and all sorts of things, mail delivery and so forth, could take away the post office monopoly. That's real straightforward. But what is trickier is to say, well, gee, what would it mean to have competing police agencies or judicial rulings, or the military saying have private companies own tanks and stuff? That sounds kind of scary, and that does sound scary. But what sounds scarier to me is to have the people in Washington D.C. control all the nuclear weapons. Right, that's the last group in the world that I would want to have a monopoly on the use of force or to control the military. Right, so the issue is not whether it's scary that some people have really powerful weapons. Those weapons do exist, and the issue is what social mechanisms are most likely to minimize them abusing that power. And so in most other areas, everyone automatically realizes that competition and not having monopolies is a good thing. Right, that you wouldn't want one company that controls all the food in the world. That would be kind of scary. They'd have a lot of power over you. And by the same token, why would you want to have one agency? For example, with the government right now, the state, if somebody says this, oh, yeah, the police broke into my house and did something wrong, or the FBI raided my house and they shouldn't have, who is the ultimate agency that determines whether that's a good charge or not? It's the state. The state is the ruler in its own process. People alleging that it did something wrong. Well, the state says, no, we didn't. Actually, we investigated, and it turns out we were fine. Right? In any other area of social life, people would recognize that's crazy, but yet when it's the state doing it, we just take it for granted. So I think people just need to realize that the current system is insane and that there's no reason to maintain these monopolies. And you can imagine, we have private arbitration. If people want to get a divorce or a manager and an employee are having a dispute over the terms of the labor contract, most people now, as a matter of course, realize that taking it to the government court system is going to take forever. They just take it to private arbitration. So how does that work? Because the private arbitrators have a reputation for fairness in delivering just rulings that both parties can live with. I mean, obviously somebody's going to think, I wish it went the other way, but they can see, all right, that's a fair ruling. And they go into the case knowing they're going to be bound by that decision, and that it works, right? So I think people just need to look around and realize that freedom and liberty and competition would work in these other areas that most people traditionally think that, the government has to operate there, when in fact, no, the state doesn't need to be there. And by the way, I've been using the term state and government interchangeably. If what someone means by government is just institutions, I'm not anti-government, but for sure I'm anti-state if that means there's one agency or institution that has a monopoly on those services for a geographical region.
There's obviously another blatant example of something that government controls that they don't necessarily need to have a hand in, and that's money. And I think Bitcoin obviously is the obvious example here to talk about. And I guess I just want to kind of pick your brain on Bitcoin. I've heard you talk about it in person at some events, but I'm sure our audience would love to hear where your head's at with, the current price, where you see Bitcoin going in the future, and its uses outside of being a currency.
Well, sure. So, again, I'm glad you mentioned that is one huge area where a lot of people just assume, and not people in the liberty movement, obviously, but average Americans, let's say, just assume as a matter of fact, like, oh, yeah, of course the government has to be involved with the regulation of money. We just want fly-by-night organizations running around issuing their own currency. That'd be crazy. And yet, again, it's just, well, wait a minute, who is the least trustworthy group in the country? People make jokes about lawyers and stuff, but everybody knows, politicians, they're the worst, and they're a bunch of crooks. And so you want them to be in charge of your money? That doesn't make any sense. That's crazy. It'd be better to, make construction workers in charge of the money or any other profession, but not the federal politicians. That's insane. And so obviously the precious metals historically were the free market money, right? No king had to tell people, hey, start using this yellow metal as a medium of exchange. People just naturally gravitated to gold and silver eventually as the free market money of choice. And then, as you mentioned now, a new innovation that was not possible, just intellectually, I don't think people could have conceived of it in centuries past, and certainly they wouldn't have had the technological means to implement it. But now a viable option is Bitcoin. It's certainly a medium of exchange. Whether it will become embraced as a world money, remains to be seen. That's just an empirical question. So the two things that I have been talking about with Bitcoin and my what I think I'm bringing to the table to the liberty debate over this is there are a lot of people who are versed in Austrian economics and who love gold as think that should be the free market money and think that that's the solution, and if governments got out of the way, that gold would be the money again. And yet they disparage Bitcoin and they say that Ludwig von Mises' regression theorem shows that Bitcoin can't ever become money. And so my modest point on that is to say that's not a good argument, that Mises' point about how regular commodities ultimately become money in the process, he was saying that it needs to be used as a regular commodity first, so people get a sense of its purchasing power relative to other things, and only then could they start accepting it, not intending to use it, but intending it to trade it away in the future. And so a lot of people have understandably said, aha, see, so Bitcoin can't possibly work because it's not like people were using Bitcoin for something else and then got a sense of what one Bitcoin was worth in terms of cars or ice cream cones or what have you, and then they started holding it because they realized it was real fungible. No, that's not what happened. Bitcoin from day one, people realized this thing is designed to be a money. And so I understand why there's that apparent problem, but clearly Bitcoin at this point is a medium of exchange. And so whatever hurdle you think the regression theorem and Mises' point provided, Bitcoin has already surpassed. And so I think it's dangerous for Austrian enthusiasts to keep saying, no, Bitcoin will never work because of Mises, because then the more it does work, the more it looks like you're saying Mises was wrong. And so I'm just warning people, stop tying him to that because the point clearly doesn't work. The other thing I would just say real quickly here is I've seen people, every time Bitcoin drops in price, the naysayers say, see, told you, just a fad. And the thing that's ironic, so lately, of course, it collapsed a lot and was down under $300, and then people were going nuts and saying, see, we told you this is all a fad, you idiots, you fanboys into Bitcoin. And then, but now, it went up back, it was above 400 briefly, right? And so that's a 33% increase in a short period of time, within a few weeks here. Right, so I guess what I'm saying, or I'm looking at a different chart here, but so my point is simply that you can go through and document, even when it was like at 50 and then dropped down to below 25, people were saying, see, look at that. And so it's, again, it doesn't mean, I'm not proving here that it is going to be worth $10,000 at some point in the next 20 years. We don't know what the future is going to be, but my point is it's just funny to me how every time it crashes, sometimes even the same people will say, yep, see, we told you so, and they don't seem to acknowledge to their listeners that they called the crash, before, and then Bitcoin surpassed that. And one last thing is I went back and looked. If you look at the price of gold, it zoomed way up in the late 70s, and then when Volcker came in and got price inflation under control, the price of gold crashed. And I've seen some people say statistics about Bitcoin's price movements, thinking they therefore blew it up and showed that this isn't a good money, that would also have been true for gold if you looked at like 1983 and quoted the price movements of gold as of that moment. But yet these people are huge gold fans. So my point isn't to say that, so Bitcoin's better than gold. My point is just it would be nice if the critics of Bitcoin who love gold would not use arguments against Bitcoin that would also be applicable to gold. That's all I'm saying. That it seems like they're not being consistent, and that really it's just they have a grudge against Bitcoin for some reason.
I'm also wondering, because obviously the price of gold and silver has been affected recently through various talks about the strengthening of the dollar. Do you think Bitcoin's price is also affected by that as well?
Well, I should say thus far. I mean, I don't consider myself an expert on Bitcoin. I mean, I know enough about the internal mechanics of it and the encryption and things like that, and to I think understand economically what it is and how it works. So I've been mostly just looking at the rhetoric of the people objecting to it, but certainly it seems. I mean, Bitcoin. When there were troubles in Europe, and I think it was in Cyprus, that was when there was a huge spike in Bitcoin's price. So I think clearly what's happening is when people think that the standard monetary system and financial framework and payment system, when they think that might be threatened, all of a sudden there's a huge stampede into Bitcoin. So yes, I mean if there's a calamity, I mean it's an odd thing where if there's just kind of a medium level drop of bad news that can make treasuries and the U.S. dollar strengthen, because that still seems like a refuge of safety if things don't completely unravel. But then, if the news gets really bad and someone starts to think that, oh man, maybe, the whole system's coming down, then I think people would flock into Bitcoin. So I'm not sure if that answers your question, but I think, yes, that Bitcoin, it's not really considered like a competitor to the dollar in the way that the euro or the yen is in terms of standard financial analysis or portfolio analysis. It's more like if the whole system comes down, then people could still think about Bitcoin. So
right.
Like if the Ebola thing, if that really starts developing, I imagine Bitcoin would increase, because people might start to think, man, if all the banks are closed or whatever, but I bet you I could still get online.
Right. And Bitcoin's usually kind of pooled in with silver and gold at the moment, just because they have this resistance-based following, this alternative currency, aura over them. I feel like that they kind of follow each other.
Right, and so I mean that makes sense to me. Like I said, I haven't studied the charts enough to say whether that's that I independently can confirm that, but that would make sense. That I think, if the whole system comes down and the banks are closed or whatever, and people aren't accepting paper checks, if you have gold coins or silver coins in your pocket, that's going to be useful. And by the same token, if you have a bunch of Bitcoin and all you need to do is be able to get online and send them to somebody, again, that's a very valuable thing to have, even if the regular banks are all closed because the government declared an emergency and the dollar crashed or something.
Right. Is there do you have any businesses, brick and mortar and or just some online businesses that are based in Nashville that accept Bitcoin?
Yeah, I think that there are a few, but I mean I don't know them off the top of my head. I mean I've talked to local people and they say they're like just people who paint houses and stuff like that. Certainly, okay. I know they accept Bitcoin. I don't know if any brick and mortar off the top of my head.
Okay.
Well, certainly, Consulting by RPM, my company, is a brick and mortar place, and I accept Bitcoin. So there's one.
That's awesome. There it is. Yeah, it's pretty surprising here in Denver. Businesses that you wouldn't necessarily think, because we have a pretty active Liberty community here, and it's pretty impressive to see restaurants popping up all over the place. Consultancy, agencies, service-based industry, and stuff like that, all accepting Bitcoin. So I just didn't know where Nashville was at compared to Denver.
Yeah, I'm trying to think. I mean, I have never been out and noticed a sign saying we accept Bitcoin or something like that, but by the same token, I work a lot, and so I kind of just go to my certain key places when I go out once in a while. So it's not like I've been surveying the downtown Nashville scene too much, so I'm not sure.
Gotcha. Well, I want to back up a little bit to talk about the current Fed policies, Fed situation. I think it was the beginning of the year they started this tapering of $10 billion a month, and as of late they just started talking about how, well, we're probably going to have to turn the printing press back on because everything else we were doing isn't working. Surprise, surprise. What are the options at this point?
Well, sure, just to give some background. So what the term, I mean, people know this idea of QE, qualitative easing. So let me just make sure your listeners know where that term comes from. What does that mean? Remember, traditionally, people can remember before this crisis hit, when the Fed would have its meetings and would announce what it was doing in terms of monetary policy, it would just say what it was doing with interest rates, right? It's, the Fed cut rates, or the Fed's held pat, or is raising interest rates, whatever. And so, specifically, it was the federal funds rate, which is the interest rate commercial banks charge each other for overnight loans of reserves. Okay, but the point is, the Fed was announcing what its intentions were with regard to a specific interest rate, and then that's what everybody went and did. Went about their business with that new piece of information. Well, the problem was once the crisis hit and the Fed massively started intervening and trying to ease, eventually that short-term interest rate got pushed all the way down to basically zero. And so then the issue was, well, geez, we can't make it go negative. No one's going to say, here, borrow $100 and then pay me back $90 next year for a negative interest rate. That doesn't make sense. And so that's why they switched away from what you might call quantitative easing, which is the normal thing, to away from qualitative to quantitative easing, where they were now announcing the dollar figures. So they were saying, we're going to buy this many billions of dollars worth of treasuries or mortgage-backed securities. So before, the Fed never mentioned how much money it was creating. If you think about that, they never said the Fed's going to add $100 billion to its balance sheet over the next year before this crisis. And I think that was intentional. They didn't want people realizing that the way the Fed monkeyed around with interest rates was by basically creating money out of thin air and buying assets with it. It was better for them, let's not even bring that up. Let's not let most people even know that's going on. Right. So that's what QE is. They're trying to now. They're not talking about interest rates because they're already at zero. They're just trying to get people to see what they're buying. So, and then the various rounds they initially announced them as far as a total dollar. So for QE, the first one, they said we're going to buy such and such billion. Then they went ahead and did it. And then what happened is, the economy seemed to be doing okay, but then once they stopped up, then the economy started sliding again. The stock market started turning around. So they came in and did QE2, same pattern. And then QE3, which some people call QE infinity, to be smart guys about it, smart Alex, was the reason that was different is the Fed, with this latest round of QE, did not give us initially a dollar amount. They just said, we're going to keep doing this. Originally it was $85 billion a month. They said, we're going to keep doing this until conditions improve, right? So they didn't put a box on how much they were going to do. It was open-ended. So then, as you mentioned, finally, this was in 2013, around April, the Fed said, okay, conditions are improving, and we are going to start tapering later this year. And then that's where you can see treasuries, the yield started increasing. It rose pretty rapidly from the moment of April and May of 2013 when Bernanke was testifying and letting Congress know that, we're definitely going to start tapering it. And then the word taper there means they're slowing the rate of new asset purchases. So they're just so they're not selling off stuff. They were just reducing the rate at which the Fed's balance sheet was growing. And then they postponed it in September of 2013. They made a surprise announcement, and then you could see interest rates move. And the reason I'm stressing this about interest rates moving is there are a lot of economists, and not just guys like Krugman, but even free market guys, who are denying that the rounds of QE have anything to do with keeping Treasury rates low. And I just think that's wrong. You can see in this particular episode where, Bernanke guiding the markets on what they were doing with tapering or then postponing it, you could clearly see that was affecting the interest rate on the bonds they were buying. And so I think the cynics are entirely correct to say part of the reason for this QE stuff was that the government was running huge deficits and the Fed was monetizing them. Like they were suppressing the interest rates to make it artificially cheap for the government to run such huge debts. So to answer your question, finally, yes, they've been unwinding ever since Janet Yellen took over, and I feel bad for her. I mean, people can make fun of her and everything. It's her own fault for accepting the position, but I think she was just dealt an impossible hand that Bernanke blew up this huge asset bubble, and then got out of Dodge and handed her the keys and said, "Good luck, Janet," and she's going to be, the first female Federal Reserve chair when the whole thing collapses on her watch, and there's nothing she could do about it. So the question is just going to be, as markets slide, and right now, I just checked yesterday. I don't know what they're doing today. I haven't checked, but the S&P 500 was down 7% just in the last month, and this is where we are now. Is the Fed is just winding up its purchases. So if it sticks to its announced plan going forward, the Fed is not going to buy any more assets. It's still going to maintain its bloated balance sheet, keep rolling over the bonds as they mature, but it's not going to pump in any new money. And so that's the issue is going to be, well, are they going to – I think the real test is going to be as we see the market, if it continues to slide, and then the next time Yellen says something, like if she basically says, no, we would really need to see the unemployment rate skyrocket before we did anything further, then I think the stock market would probably really tank. Right. I think right now we're in this sort of limbo where people are thinking, the Fed has come to the rescue the last two times when the QE ended and the stock market started sliding. Let's see if they come again to be the hero. And my guess is she's not gonna. I think the people in Washington and at the Fed kind of know that they can't just keep inflating every time the stock market dips, that ultimately that's going to just be a disaster, and they got to at some point just suck it up and bear the brunt of the collapse. And so my guess is that Janet Yellen is going to do it early on her watch and get it out of the way. And there's historical precedent for that too. When Volcker came in, Greenspan came in, and Bernanke came in, they all, if you look at their records, had a huge economic crash early on when they first took over, and then they inflated and handed it off to the next person. So if Janet Yellen fulfills that pattern, it'd be the same thing, that she's going to sit there and endure the huge crash that Bernanke blew up from his bubble, and then she'll probably reinflate and then hand the keys over to the next person.
Yeah, well, it was kind of surprising to hear you say that, actually, that she'll allow it to happen. I think it's definitely a different time with the innovation like Bitcoin existing. I'm looking forward to seeing what could unfold during that time in terms of more widespread adoption for Bitcoin, and or just more education towards gold and silver at that point too.
Right. So I think, again, with like this stuff we said before about not just being fatalist about it, what that means for people is, you should go out, and and I know what I'm saying is kind of depressing, but that's the situation we're in here, and that should be an impetus for people to go out and act. Not to just go to the bar and drown your sorrows, but
right.
To figure out, okay, well, if there is a chance there's going to be a big asset crash, do I want my whole future tied up in the S&P 500, or do I want to, diversify myself? Do I want it, if there is a chance that there's going to be, the banks closing while they reorganize and do such and such, maybe I want to have forms of payment that are not tied to this system and that I can use in case there really is a crisis for a while.
Right. An obvious option for that is gold and silver. And I did want to touch on just kind of the generational difference in this understanding, because people maybe 45 and older can understand that they've got a lot more wealth tied up into these banks and into stocks and things like that they can see a more flexible exit strategy to get into gold and silver. But it's the under 45 that has me not concerned, but I'm just I'm in that generation, so I'm interested in how to get that age group knowledgeable and interested in buying gold and silver to protect themselves from the future. And I just wanted to know, I know you do a lot of the Mises University high school seminars and stuff like that, but what is that young, teenage group thinking about gold and silver right now? I know it's a little biased because they're already attending Mises University, but I don't know if maybe it's a good sample of the rest of them.
Well, that's a good question. I think the problem is none of us can remember actually, gold and silver being the money, whereas, people in the 1800s, they really would know what it would mean to get paid in gold coins for something, So it's I kind of envy those people that for them it was a real thing, where it's the idea to them of unbacked green pieces of paper being the money would be horrifying.
Right.
Well, I think young people, they do. You're right, and I don't know if this is what you're alluding to. The idea of going out and buying gold, I think to them seems a little impractical just because it has such a high unit price. And so I think you're right that maybe for them, they more think that just getting some silver coins would be a more practical thing, given that they might only have $100 a month or something they can set aside to do something with. And I think a lot of them are more interested in Bitcoin as well, just because that seems like more of a techie kind of solution. And so, but again, there's all kinds of things too that you can have gold that's being held abroad and that sort of stuff too. And so I think in general they are understanding that the current system doesn't work, and that the idea of diversifying and having something like Bitcoin, that doesn't shock them. Whereas for a lot of older people, when I try to explain to them what Bitcoin is, I mean, they really don't even get what it is, and they're like, well, I can't get into something that I don't even understand. And I get that. I mean, that's a perfectly valid objection. Whereas the younger people, they get very easily what it is, and then it's just a matter of, do they think it's a good idea? So I think a lot of them, and by the same token, though, there's a lot of the young people, they tend to be real mobile, and not have a lot of possessions or whatever, especially in this economy, and they might be living with their parents still, or just all sharing an apartment together. And for that kind of thing, having just some gold and silver on your possession, I mean, you can just hop in the car and go somewhere, and you can kind of take your savings with you. That's kind of a neat amount of freedom that you have.
Right. I just would like to know what you're working on at the moment. Just really excited about all the knowledge you shared with us today. Is there any particular articles or books or anything like that we should be keeping an eye out for?
Well, yeah, thanks, Megan, for asking. It's I got two big things coming out. One is with the Independent Institute. It's based on Ludwig von Mises' Human Action. And so the task I was given was to say, you know what, we love Mises' book. It's one of the most important, if not the most important, economics book of the 20th century, but it's kind of inaccessible. It's a really big book, and Mises used very formal language. So can you write something shorter that maybe would be good for an econ undergrad to get assigned in a class, or just the intelligent layperson who wants to read it, that captures or distills down the main points of Mises' book. So I have that coming out. The tentative date is May 2015 for when the Independent Institute is going to be releasing that. And then another one is I am working on an analysis of the U.S. healthcare system with an emergency room doctor, and he's going to be the co-author on it. And I'm really excited about that, where it's sort of, I'm giving the big picture economics, and he's given on the ground, saying this is what I've seen over my career, and as you can imagine, we're saying Obamacare is just going to make everything a lot worse, and then it gives advice to people about how do you sort of extricate yourself from this system and keep yourself healthy.
Wow, those sound like two really exciting projects. What was the title of the Human Action inspired book?
I think it's not set in stone, but I think it's Economics and Coordination.
Okay.
Is the working title right now.
Well, great. Well, best of luck with that, and thank you so much for sharing your knowledge with the listeners today. Your work is always very clear-cut and purposeful, and just really enjoyed talking to you today, and I hope we cross paths again soon.
Well, thanks, Megan, and if anyone wants to just keep track of what I'm doing, just go to consultingbyrpm.com, and that's where I kind of just post everything I'm doing.